In today's session, we would be discussing the preparation of stores ledger account. We have been given the details of the transactions for material X for company ABC, and we've been required to prepare the stores ledger account according to LIFO. Now, remember the rationale for preparing stores ledger account according to LIFO. The logic that we will be following is last in, first out. Okay? What came in recently, that would have to go out first. Okay? Whatever came in recently, that is the material, or that is the batch that has to go out first. So that's the rationale of LIFO. Unlike FIFO, what came in first would go out first. Here, what came in recently would be going out what is what is going out at first. So that's the reason why we say LIFO often reflects the recent changes in the price. That's the reason why we say LIFO would reflect any recent changes in the price that would be immediately reflected by LIFO. Okay, so with that note, we've been given a few transactions of company ABC, and we have been asked to prepare the store ledger account. So keeping this in mind, let's go about with the preparation. Let me quickly change the screen view. Okay, now let's look at the question one by one. Let's look at the transaction. We've just prepared the format. We know stores ledger account has got three important parts: receipts, issue, balance. Receipt we are using for capturing whatever purchases that you're carrying out. Issue, whenever you have to carry out any consumption, that gets recorded under issue. And then as and when you have transactions, it is mandatory for you to record your balance. That gets captured in this column. And then in each of these sections, we will be capturing the quantity, rate, and then the amount. So with that note, let us start off with the entries for this particular question. Now remember, these transactions are taking place in Jan for 2020. On 1st Jan, we've been told that on Jan 1st, we've been told that we have an opening balance of 200 units that was purchased at 2 rupees. So we do not have any receipts or any issues here, but we are capturing the balance, or we have the opening stock as the balance. So the quantity that we have in our go down, we have 200 units. This we know we bought at 2 rupees, and then in total the amount is 400. So this is what is lying in a go down as of now. So we are done with the first transaction. Okay, first transaction, remember, we were capturing the opening balance. Jan 2nd of Jan, what is happening is we have issuing 150 units, okay, which means there was a demand for 150 units, and that 150 units we are issuing. So remember, the rationale we would be following is last in, first out. Now, thankfully, in our go down, we have only one batch of material that is lying, and we know that this was bought at 2 rupees. So out of 200 units that you have in your stores, you would be issuing 150 units. The rate at which you would be issuing is 2 rupees, and then this the total works out to be 300. Okay, now let's capture the balance details. So out of 200, you have issued 150, which means you're left with 50. This you bought at 2 rupees, and then the balance is 100. Okay, so we are done with the transaction for Jan 2nd. We are done with the transaction for Jan 2nd. Now let's move on to the next one. Okay, let's move on to the next day. The next day is Jan 5th. The next day that we have the transaction is Jan 5th. So on Jan 5th, you have carried out a purchase, and you're purchasing 100 units, and these 100 units you have bought at 2.2 rupees. So let's record this. Since it's a purchase, you would be recording under the receipt column. You would be recording this under receipt column. So 100 units, the rate at which you will be capturing them is 2.2, and when you work out the math, it works out to be 220. Okay. So you have bought a new batch of material. Now let's record the balance. Now we have to be slightly cautious when you're capturing these details, because remember, we have to follow the rationale of LIFO. So we have to capture it carefully. So you already have 50 units that you bought at 2 rupees. Then you have a new batch of 100 units that you bought at 2.2. When you capture all this, it works out to be 100, and then this works out to be 220. This works out to be 220. Okay, so now we have two batches. We have a batch of 50, and then we have a batch of 100. And remember, these two batches we have bought at two different prices. Now let's move on to the next one. Next transaction is on Jan 7th. Okay, next transaction is on Jan 7th. So Jan 7th, let us look at what is the transaction. Issued 100 units. Okay, next transaction is issued 100 units. So on Jan 7th, you have to carry out a issue. Okay, so let's issue this. You will be issuing 100 units. Now remember, the rationale that we are following is LIFO. So this 100 units, where would you issue it from? You would issue it from the recent one. Okay, this one. So this you had bought at 2.2. That entire batch was bought at 2.2, and then you're issuing as it is. So this works out to be 220. Let's record the balance. So if this entire batch gets issued, then you're left with 50 units that you bought at 2 rupees, and then it works out to be 100. So this is how you would be carrying out issue when it comes to LIFO. So remember, in LIFO, the rationale is last in, first out. Okay, the rationale is last in, first out. Okay, so we have captured that. Now let's look at the next one, Jan 10th. Okay, now what is happening on 10th of Jan? 10th of Jan, you have purchased 150 units. Okay, you're carrying out a fresh purchase, and you're purchasing 150 units. 150 units, and this was bought at 2.4. Okay, this was bought at 2.4. So let's record the balance details for this. So 150 of this that you had bought at 2.4, it works out to be 360. Okay, this works out to be 360. Now let's record the balance. Okay, let us record the balance. So 50 you have, this was bought at 2 rupees. Now you have a recent batch of 150 that you bought at 2.4. This works out to be 360. Okay, this works out to be 360. Now let's look at the next transaction. So before that, let's just close this, just to make sure that you are able to differentiate between the transactions. So Jan 12th. 12th of Jan, you're issuing 100 units. Issued 100 units. Okay. So 100 units. Now this 100 units, where will you issue from? Okay. This 100 units, where will you issue from? You will issue from the recent batch. Why recent batch? Because remember, the rationale that we are following is LIFO, last in, first out. This 100 units, since you're issuing from the recent batch, this was bought at 2.4 rupees, and it works out to be 240. Now let's record the balance. The first batch of 50 that you bought at 2 rupees, then out of 150 you have issued 100, so you have another 50. Okay. This was 2.4, so which means you are left with, these are the details. Okay. These are the details of your items in your warehouse now. Okay, next one. Next is on Jan 20th. So on Jan 20th, what is happening? You are purchased you're purchasing 180 units. Okay? You're purchasing another set of units. Now you're purchasing 180. This 180, at what rate did you buy? You bought at 2.5. Okay? This 180 you bought at 2.5. So 180, if you're buying at 2.5, when you work out the calculation, let me just quickly punch this into the calculator. So 180 at 2.5, the total works out to be 450. Now let's record the balance. Okay? Now let's record the balance. So here, now what is very interesting here is that you have one batch of 50 that you bought at 2, second batch of 50, 2.4. Now you just bought a recent 180 that was bought at 2.5. Okay, now let's record the details. So that's the balance that you have as of now. Okay. Right. Now let's look at the last transaction, Jan 28th. Jan 28th, you are asked to issue. Now, how much are you asked to issue? You're asked to issue 200 units. Okay, last on Jan 28th, you're asked to issue 200 units. So 200 units, you will have to carry out a issue. Now, 200 units, which all batches will you issue from? Remember, the rationale is LIFO. So out of 200, 180 you will issue at 2.5. Why? Because it's from this batch, last in, first out. So this out of 200, 180 you're fulfilling from here. Now, you remember your demand was for 200, so you still have to fulfill another 20. So now that remaining 20, where will you fulfill from? You will fulfill from here. So this is 2.4. This that you will fulfill from here, that is 2.4. So when you work this out, this is 450, 2.4, 48. And let's record the balance, 50, 2, 30, 2.4. Work this out, 100, 72. Okay. So that's the balance. Okay, and that is the balance of material that we have in a godown. So let's close this one. We are done with the store ledger account for this particular question as well.